Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the charts for Bitcoin, taking a look at what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. And if you are looking for a little bit more from the crypto space, why not check out the new podcast as well? It's available here on YouTube, on Apple and Spotify as well. Link in the description down below. Why not check it out? Subscribe to the YouTube podcast channel and enjoy some easy listening on the way to work. All right, guys, let's waste no more time. Let's jump right down into this. Right, so Bitcoin paired up with USDT on the hourly chart, and Binance is the data source. Now, on here we are going to be taking a look at a couple of things. Right, so we had this kind of surge to the upside, and if I grab hold of the price point here, I think we had 23.27%. Now, this has actually happened a little bit earlier than expected. I was actually expecting this kind of fifth wave to come down a little bit lower on our third wave low overall, and we actually moved up and we invalidated this low just here, right? So basically we moved on down. Now we can of course acknowledge that it is a 5-wave structure in here. It's just not as we would like it, so it is what it is, but essentially, yeah, we kind of have this little kind of mini structure right inside there. So that is what that is. It isn't ideal, but it is there. Okay, and then of course we have this move to the upside. Now there's lots of different ways you can take a look at this fourth wave up, it is 23.27 at the moment. Doesn't necessarily mean that that's actually done yet. We've started to see a little bit of a pullback here, and what I would expect to see here is a 3-wave structure, right? So we come down, we move up, we come down a little bit more, and that's kind of what we're looking for. Now, if I throw those Bollinger Bands on, you can see that we were testing this upper band yesterday, so coming down and testing the lower band is kind of what we were looking for here. I do expect a little bit more room to the downside. You can kind of see this happening right now at the point of recording, and just because the 4-hourly chart has that stochastic RSI looking to come down into that oversold area. Now, on this 4-hourly chart, you can see that actually all we're doing here is testing this middle band, whereas we've got to come down a little bit lower. So as we lose this area, do expect ourselves to come down a little bit more, and then once that is done, I'm expecting another move upwards. Okay, so we'll be down in the oversold area on the 4-hourly. We're already in the oversold area on the 1-hourly chart. Okay, so just kind of keep those things in mind. Now the 8-hour of course is actually looking to come back down and test that lower band as well. It is overbought, so there's actually quite a bit of room to the downside to be had, but again, like I said, I'm expecting a bit more of a surge upwards before we see some kind of massive move into the 5th wave down, because if I come back to our hourly chart, just remove the stochastic and take those bands off there, we can of course acknowledge the wave structures here as well. So if we take a look at Elliott wave theory, there's a couple of things that are interesting to me. Okay, one is we've got a lot of overlap here, right? And it's tough, but you could, if we wanted to, make this a 5-wave structure. We could go 1, 2, we'd have to go 3, 4, and then finally 5. Okay, so there is this. Now, if I grab hold of a Fibonacci retracement and I throw this on here, and I just move this over to this low, we can see that we kind of hit that 1.618, just about hit that 1.618 just there. Okay, then we pull back down, wave 4 does not cross wave 1, and then we have that final surge upwards there. Now, because of the structure of the entire macro outlook here, this is an odd thing to have, right? It isn't the first time we've seen such a thing either. It does potentially mean that we will have a zigzag pattern here going on, right? So with this 4th wave, and we've got a 5-wave move up like this, then essentially we might be looking for a 3-wave structure down. So as I said, we might come back down. We might just test this low range of around 19. Again, you can see the support to be had here. Then we bounce up in a small way, not going higher than that 5th wave low, 5th wave high, sorry. And then we just pull back down again. And then once that is done, it is possible. And if I actually just go ahead and just grab and this is going to be approximate, guys. It's not going to be perfect, but I'm going to yeah, I'm going to just put that back there for a second. I'm going to say that we move up to, yeah, about here. which would be the 382 retracement or 618 retracement, and then that should take us down to about maybe 19,150. Okay, and then from there, basically just taking this entire measurement for our zigzag. Okay, so a little bit of speculation as to where this thing might actually end up going and how we get there, but for now, considering we haven't got full wave moves finished, I'm just going to move this up as well to about here. So the high for the fourth wave under this structure would be about 23,600. Okay, and what we'd end up with is then this kind of 5-wave structure like so. Okay, and that one might be like that. So you end up repeating this 5-wave pattern with a 3-wave down and a 5-wave up. That one then actually be technically an ABC. So you'd have A, you'd have B, and you'd have C, just like that. And that basically marks the end of our fourth wave. And if our fourth wave does end there, then that means that we can then predict out our fifth wave low based on Fibonacci retracements. This would actually then put us right into this little sweet spot down here. And I'll just go ahead and mark this up, and I'll just put it right here. Okay, and this basically is 14,700 to 16,400. Okay, and if we zoom right out and we take a look at that, we end up with 1, 2, 3, a complicated 4, and a pullback into 5. Now, if we actually take the high point of our wave 1 as well, which would be right here, down to our low for our wave 3, which is here, our 618 retracement actually is 25,000. So this would actually be approximately the 50% retracement. So again, it's an area that, yeah, we could see moving into this area here. Now, the 382 area at 22,200, we've already kind of or just a little bit lower than that at the moment. That would be a typical kind of move for this this kind of fourth wave, but with wave 2 being where it is, looking pretty simple and not actually actually a pretty standard wave 2 by the looks of it actually. So yeah, for the most part, we could potentially just be pushing up a little bit further than the standard move here, heading towards the 50% retracement of the wave 1 through 3. And in fact, actually, if I move this over just to wave 3, it might actually make a little bit more. Grab that right there, we go. Yeah, there you go. Exactly on the 50% retracement just off wave 3. So retracing 50% of wave 3, then pull back down into this 1.236 to 1.618, anywhere between 14.7 and 16.4. But again, we'll know more once we actually finish some of these moves. We've had to kind of speculate a little bit on where we think things might go based on their current moves. But yeah, a little bit too speculative at the moment to be 100% accurate, but I will, of course, leave these in here. And then we can, of course, assume that this is going to be an approximate area for us to kind of look at. So again, we'll bring the stochastic RSI back in here. We'll just expand this back up, and what we'll do is we can take a look that we've got this little bit of a pullback down on the 4-hourly. That'll finish that off. That'll finish that W wave right there. The 8-hourly chart, of course, if I grab hold of this one, and I just remove that off of here, so I'll just put that down to 7. And okay, that one. So yeah, basically looking at this, we are potentially pulling down a little bit further on this 8-hourly chart. This is the one that really I think we're going to stay up here for a little bit longer, just kind of bounce around like we had done previously as we kind of look to move up a little bit more. Okay, and I'll just actually move this up quite a bit. Let me just move that to there. So yeah, so basically our 8-hour, I'm not expecting this to move down just yet. Obviously we had the targets kind of set. Now this was looking around 15.6 to 17, but that's obviously changed, so I removed that fib. And on the daily chart we are moving up, so it could be that this zigzag pattern, this 535 structure that we have here, this could potentially actually be that the 7, I don't need it on the weekly, could be where we see this go up into the overbought area when we complete the zigzag, and then being overbought on the let's say the 4-hour, the 8-hour, the daily, that could really help bring that price down to those lower targets. So yeah, things to be thoughtful of, to be concerned with, but essentially, yeah, that's kind of where Bitcoin is at the moment. And on that macro view, if we bring back into Bitstamp data this time around, Just bring this in and remove the stochastic there. You can see, you know, we are pulling down just a little bit lower than the previous all-time high. So we've hit that low there. Again, you know, we've looked at it before, we've looked at it many times. We do have those glorified moving averages. So the SMA, so the simple moving average, again, you know, we pull down a little bit lower than this. There's no rhythm or rhyme to it, other than the fact that, you know, you do kind of bounce from these areas. So again, being this, you know, is kind of okay. It's good to kind of have that reference, but the main thing to really focus in on is that Gaussian channel, the history of where this has actually, you know, represented decent bear market lows, and of course, you know, what we should be expecting to happen next, as the Gaussian channel just turned red a few weeks ago, and where this kind of leans us down going into. So on the macro side of things, I'm expecting a little bit more room to the downside. I'm expecting that final fifth wave low. At the moment, you know, with a little bit of speculation, we have that kind of scoped out down there at 15,000. So yeah, or 14,700 through to about the 16.5K. So yeah, we're going to look at that at the moment, but again, things can fluctuate. If we get an overextended wave, we could potentially theoretically go down lower, but again, until you actually have the structures to kind of support it, it is just wild speculation at the moment. I know a lot of people will just look at previous supports and resistance lines, and these are fine. You know, traders will be able to do that and resonate well with that, but do understand that Elliott wave theory is a slightly different approach. It is actually tracking people's behavior in the space, and as they resonate with these supports and resistance lines and patterns and real world events. So by tracking Elliott wave in the space, you're effectively tracking the millions of people who are, you know, actually involved in actively trading on these cryptocurrency pairs. So just keep that in mind. And obviously, when you are using a stable coin or USD in your analysis, that is also going to have an impact depending on the economic outlook of those particular assets. So for example, if the spending power of the dollar goes down, then you should actually theoretically expect other assets to go up in value, right? You see this already in the day-to-day living expenses, with that being gas prices, house pricing, car prices, you know, grocery shopping, etc., right? So there's no different when you start thinking about other assets, be that gold, silver, or even cryptocurrency assets, right? Yes, we're in a bear market at the moment. There's a lot of fear in the space, but actually, once people actually start to see the inflation and these things actually kick in, what actually is going to happen here is that these assets are going to go up in value as your spending power diminishes. So do understand the pair and the importance of that as well. But guys, I'm going to leave the video there. If you do find this or have found this useful and informative, hit the like button. I do appreciate that. It really does help push this content out to like-minded individuals. And of course, if you are new to the channel, why not subscribe and stay up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.